Welcome to Second Take, the show that focuses on the issues behind the news. Diversified mining and marketing company Glencore sees a shortage in nickel arising. On the other hand, the company is producing zinc at negative cost. Mining Weekly editor Martin Creamer tells us more. Welcome, Martin.
Thanks, Sashnee.
Why does Glencore foresee a shortage in nickel?
It's very interesting when a company is both in mining and marketing. That marketing side of it is crucial. I think of it more and more. It's of a major benefit to a mining company when they're actually trading, and they're trading intensively around the world so they can see trends develop. And I know that even analysts were taken by surprise at the extent to which nickel is now being demanded in the electric vehicle. The electric vehicles coming through at the moment are catching a lot of headlines. And if they start, if this momentum builds up, it's going to create a huge demand for nickel, which had been in a bit of a doldrum. We noted last year that Glencore, which is a huge company, when I talk about trading, they've got more ships than the Royal Navy, so they really get around the place. They actually cut back on their production because they're miners and they're also marketers. They found it more advantageous to actually cut a big slice of nickel out of the market, to say, look, we don't want to overproduce to the point where the price drops and nobody has any benefit. And that actually helped the market price to start ticking up. Well, it's done so to a point now where people are saying, isn't it time you brought that withheld product back onto the market, because it looks like the price warrants it. And of course they've got a lot of traders, they've got a lot of experts, smart people who will tell them exactly how to do this so that they don't have the effect of dropping the price again. But you can see just the latent power in pricing of the metal that they've held back will earn them a lot of cash as they put that back into the market. So interesting being a miner and a marketer at the same time.
Now, nickel ore exports are not occurring from Indonesia, and the Philippines is cutting back on exporting. Why is this?
So this is a sort of, countries take decisions, things happen in countries, and sometimes you cut back on projects that take a long time to come back. So there are all sorts of implications that have led to this shortage of nickel coming onto the market. We talk of our projects here, we talk about Vedanta, Zinc International, going to mine zinc at Gamsberg. It's going to be fantastic. It's one of the biggest remaining zinc deposits in the world. But it takes time, to actually get that out of the ground, to process it, to turn it to concentrate, to get it into the market. Whereas you've got to act quickly during these periods. And when you see Glencore can take its own production, start moving it faster, and get other people's production, they can do well in the market, especially when there's a hold-up from traditional suppliers like in Philippines and Indonesia. This gives them that added strength of elbow.
Glencore is also producing zinc at a negative cost, and this year the zinc price has shown a dramatic price appreciation. Can you tell us about this?
Imagine producing something at minus cost. Your costs are zero, but they're below zero. So towards the end of this year, the zinc production, because of the surge in lead prices, and lead is a co-product. So your primary product, you're mining zinc, but you're mining lead at the same time. But the price of the lead jumps up to such an extent that because you're a primary producer of zinc, you're saying, well, I'm getting this for nothing. No, I'm getting this for negative cost. Starting this year, towards the end of this year, they started at a minus 3 cents per pound. And they're going into 2017 at a minus 14 cents per pound. That's quite a sweet spot to be in when you're a big marketer of zinc like they are. So it just shows you how these markets are starting to turn into a more favorable position. And we had that long tradition of a overproducing industry. And suddenly people cut back and they didn't invest in new projects. And it just shows you how quickly it catches up with you. That the price then is so favorable that you can actually produce at negative cost.
Now, Glencore's CEO says that he does not see increased zinc supply coming from China, and that supply from new projects is merely replacing material lost to mine closures.
You see, that's the thing. A lot of the new projects coming on are replacement projects. Like, you saw closure of projects in Australia, Century Mine particularly. The new projects coming through there are sort of barely replacing what has been lost by the closures. And that is always good for price. When there's a bit of a supply constraint, it buoys the price. And the industry really needs that sort of thing at the moment because it's gone through such a torrid time. But some of the companies are starting to really look good. You can see from their share price, like Glencore share price has gone up by more than 200%, this year. It's cut debt. It's really strengthened its balance sheet. So one would get the impression that this resources industry is starting to tick up again, which is going to be good for South Africa because, you always want a good mining industry in the world from our point of view. But we have been set back quite badly by the government, set back very badly by the Department of Mineral Resources. And, hopefully we don't miss another upturn because the previous upturn in the resources industry, from the year 2000, we missed out on that. And a lot of it was to do with logistics. The rail didn't match demand. And one hopes that doesn't happen again. We can see that we have these zinc prospects developing in the Northern Cape. They're very good, with that Vedanta Zinc International. They bought that from Anglo American. They've already paid it back. Even before the Gamsberg project, they really did a lot of work around the existing assets and were able to pay that off. I'm sure Anglo looking at that now must think, gee, why did we sell that? But Vedanta also, it's India based, but it's also listed in London. They're licking their chops at the moment, but they've got a bit of work to do. They do have zinc from other parts of the world, but this project, you can see they're starting to move it forward. And this week they appointed Avenge as their mining establisher. They're going to establish the Gamsberg mine, and then Avenge is also going to mine. So it's going to build the mine and mine as a contract miner. And we see ELB also getting a contract there. So they're really moving this along. But you're not going to get first ore before 2018. By that time, some of these companies would have made so much money that their shareholders would really be happy. And you can see, particularly, Glencore is big in this. And they have announced a new dividend policy, which is innovative. They're saying, we will take $1 billion a year. That's definite for you, shareholders, split over 6 monthly periods. That's for sure. You can bank on it, that you're going to get this R1 billion, and then we'll take 25% of other free cash flow. We'll put that into the dividend as well. So they're really stealing a march on the big companies like BHP Billiton and Rio Tinto. BHP Billiton had a terrible tragedy in Brazil, killed 19 people, and damaged about 200 houses and did all sorts of terrible things there because they allowed one of their slimes dams to burst. And Rio Tinto, they're struggling with a new bribery scandal in Guinea at Simandou. But everything just seems to be going right for Glencore at the moment, so one can see them sort of possibly getting into a pole position in the race between these big mining companies.
Thanks for speaking with us, Martin.
It's a great pleasure, Sashnee.
That's it for today. Join us again next time for more news analysis on South Africa's mining industry.